Good evening. This is Duane Lowry for the DPP Grain Desk on Sunday, November 11th. It's currently 4:27 in the afternoon. The outlook here tonight, probably going to start everything a little bit weaker. Question then is, what do we do with that? Tomorrow's Veterans Day holiday, so we don't have any USDA weekly crop conditions or week harvest or wheat conditions to report until Tuesday afternoon. Market direction and sentiment here tonight is largely being dictated by last week's performance and Friday's very weak price action. I think if we look at weather, you've got some rains occurred this weekend in parts of the U.S. hard red winter wheat region, favoring the eastern part of the plains. Certainly beneficial to those areas that got it. Looking ahead over the next couple of weeks, we really don't have much more precip for those areas, but basically we're at the point where the window of opportunity to impact the crop condition there is largely closing, and we're going to be moving into dormancy soon. Moisture from here out will be certainly beneficial and welcome, but it'll have an impact on the crops next spring, not at this point in time. Crop ratings for this time of year for wheat are pretty poor. Some of the poorest crop ratings for this time of year we've had, but the reality is the crop ratings at this time of the year versus any correlation with final winter wheat yields is pretty limited. So I'm not sure it really means anything. It's a talking point, but I'm not sure it has any real bearing on crop production outlook. South American weather is favorable, beneficial, acceptable, any word you want to use to describe it. The outlook over the next couple of weeks is non-threatening. It's probably could accurately be seen as an improving forecast. So you don't have a bullish weather story there. And I think that with the price action you've seen in beans, and all of it as far as wheat, corn, beans, and none of it was good on Friday. And over the last several weeks, the price action corn has been poor, many disappointing days, and yet the trade is long corn. Price action wheat has been weak. We've had a two-sided trade mentality. People have been willing to trade soybeans from the short side for the last 2 or 3 weeks. So basically, as we look ahead on the calendar, there isn't any new fundamental information that's going to be coming at us basically between now and the first of the year. And if we don't develop a bullish South American weather storyline, we don't have much for fundamental input. And that creates a situation where the path of least resistance could be to weaken all of these markets. Corn certainly is vulnerable to liquidation pressures. Beans are vulnerable to further downside risk, whether you're looking at fundamentals or charts. The wheat market has more of an appearance of creating a major top here. Recent gains look very suspect to me, should not be embraced. I think downside risk in wheat could be very significant. If you look at intermarket spreads, wheat's gained a lot on corn. I'm not sure that's something that can be sustained or maintained. And so, downside risk for new crop wheat values, could easily be $1 from where it is. So producers have every reason to be looking at price protection strategy for new crop wheat levels. Corn, I think there's still a fundamental argument that suggests there should be a reasonable floor price to corn and some improvement in prices over the next several months. The question, though, becomes where does that start? From what price level does it start? People think that we've got the seasonal low in place from late September, which current values are probably 30-40 cents above that. I think that the risk here is that we experience a liquidation flushing of all the people that have put on long positions in corn for probably all the right reasons over the last several weeks, but we have not been able to generate any upside momentum. We've had a lot of overlapping swings, trading range environment, but we've not been able to build any upward momentum. People thought we would get some ability to build it after this reports that we had last week. That didn't materialize. We had attempts at strong performance Friday, unable to maintain it. We finished probably 17 cents off of the day's high. This is just not good price action for a market that's already long. And I think the risk here is that we experience a liquidation period going into the end of this month, maybe into the end of the year, and that we violate that September lows and flush the market out pretty hard. However, from that, once that happens, I think there's a good chance corn has good upside potential. So for a while here, corn is vulnerable to liquidation pressures. Soybean market may have 50 cents more of downside risk. Maybe it's a dollar of downside risk if we don't experience any South American weather concerns between now and the end of the calendar year. But throughout the growing season, the odds are we're going to have a weather scare down there. But right now, the momentum is building to the downside, and I think you've got 50 cents to a dollar more of downside risk here in the soybean market. As far as tonight is concerned, look for the market to start a little weaker on the follow-through disappointment from Friday's performance. But I think you got short-term technical conditions and a holiday tomorrow, lack of any USDA data, any government financial reports, things of this nature. I think we can see some stabilization and recovery attempts occur tonight and tomorrow. Problem is, short-term technicals will create selling above the market in wheat, corn, and beans, all of them, and any short 1 to 2 day corrective bounce is going to be met with selling activity, and the overall outlook continues to warn of more downside risk in all of these markets. For the DPP Grain Desk, it's been Duane Lowry. Thank you.